NPOs are not-for-profit organizations or non-profit organizations or entities formed to provide services to the members or to the general public. The primary objective of NPOs are to provide services and not earning profits. NPOs provide cultural, educational, health, religious, community, social, welfare and other public services. NPOs are set up to promote art, science, commerce, culture, education, sports, relief to poor, religion, etc. Not-for-profit organization is a separate legal entity not owned by any individual or an enterprise. Examples of NPOs are public schools, colleges, hospitals, charitable institutions, trusts, cultural and literary societies, sports and social clubs, blood banks, etc. Persons who have started these NPOs are called members instead of owners. NPOs are managed by a group of individuals, often called trustees or managing committee or governing body. NPO may be involved in some trading activity also, but the profit earned by such activity should be used for the objective for which the organization was established. The main books to be maintained by NPO are cash book, register of members, register of assets, etc. Funds received by NPO includes subscriptions, donations, membership or entrance fees, loans, legacies, grants, interest on investments, etc. NPOs prepare financial statements every year which includes 1. Receipts and payments account, 2. Income and expenditure account and 3. Balance sheet. Receipts and payments account is the summary of cash book, including bank, under the appropriate heads of accounts. Receipts and payments account is a real or asset account. Receipts are recorded on the debit side while payments on the credit side of receipts and payments account. Receipts and payments account records all cash and bank receipts and all cash and bank payments. Receipts and payments account records receipts and payments of both capital and revenue nature. Receipts and payments account records all cash and bank transactions, whether it relates to the current year, previous year or subsequent year. Receipts and payments account is based on cash basis of accounting. Hence, no adjustments are made in this account. Receipts and payments account shows the sources and utilization of cash. Receipts and payments account begins with the opening balance of cash in hand and cash at bank. Opening balance appears on the debit side. Receipts and payments account ends with closing balance of cash in hand and cash at bank, which is shown on the credit side. Receipts and payments account is prepared at the end of accounting period and not prepared date-wise. Receipts and payments account does not record non-cash expenses or non-cash incomes. Depreciation, bad debts, accrued income, etc. will not be recorded in receipts and payments account, as they do not involve any cash or bank. The adjustments for outstanding expenses, outstanding incomes, prepaid expenses and incomes received in advance are not recorded in receipts and payments account. Interest due on investment but not yet received, will not be recorded in receipts and payments account, as it does not involve cash or bank. Accrued income and expenses are not considered in receipts and payments account. Purchase of fixed assets will be recorded on the credit side of receipts and payments account. It also appears on the asset side of the balance sheet. New assets purchased or assets sold are to be found out by referring to the receipts and payments account. Receipts from the sale of old assets will be shown on the debit or receipt side of the receipts and payments account. It's not an income for NPO. Receipts and payments accounts begin with debit balance. Debit balance indicates balances of cash in hand or cash at bank on that date. Cash account is prepared date-wise, while receipts and payments account is prepared under appropriate head. Opening balance of bank overdraft will be shown on the credit side of receipts and payments account. NPOs prepare the income and expenditure account in place of profit and loss account. Income and expenditure account is akin or similar to profit and loss account. Income and expenditure account is a nominal account. All real and personal accounts are shown in the balance sheet. All expenses and losses are recorded on the debit side and all incomes and gains are recorded on the credit side of income and expenditure account. Income and expenditure account records only the revenue receipts and payments relating to current accounting period, whether paid or not. Income and expenditure account is prepared on the basis of accrual concept of accounting. Hence all adjustments are made in this account. NPOs prepare the income and expenditure account to no surplus or deficit. Income and expenditure account has no opening balance. The closing balance of income and expenditure account is called surplus of deficit. Excess of income over expenditure is called surplus. It is added to the capital fund. Excess of expenditure over income is called deficit. It's deducted from the capital fund. Credit balance in the income and expenditure account means excess of income over expenditure. Debit balance in the income and expenditure account means excess of expenditure over income. Depreciation on fixed assets will be recorded on debit side of income and expenditure account and will be deducted from the value of assets. The adjustments for outstanding expenses, outstanding incomes, prepaid expenses and incomes received in advance are made in income and expenditure account. Interest due on investment but not yet received will be recorded in income and expenditure account and balance sheet. Capital expenditure is an expenditure the benefit of which extends beyond one accounting period. Expenditure that gives benefit of enduring nature is called capital expenditure. Examples: the cost of acquisition of land and building and any addition thereto. Revenue expenditure is an expenditure the benefit of which expires within the same accounting period. Examples: salaries to staff, rent, sports materials used, honorarium paid, etc. Life membership fees, specific donation, special funds, sale of fixed assets, etc. are examples of capital receipts. Subscriptions, general donations, sale of newspapers, entrance fees, etc. are examples of revenue receipts. Purchase of fixed assets will not be recorded in income and expenditure account because it is a capital expenditure. Sale proceeds of fixed assets will not be recorded in income and expenditure account because it is a capital receipt. Profit or loss on the sale of a fixed asset is recorded in income and expenditure account. Loss on sale of fixed asset is debited to income and expenditure account. Gain on sale of fixed asset is credited to income and expenditure account. Subscriptions from members and donations from public are the major sources of funding of NPO. Periodic subscription from members is the regular source of income for the not-for-profit organizations. The periodical contribution of a fixed amount by the members of NPO is called subscription. NPO may receive subscription periodically, say monthly, quarterly, half-yearly or yearly so that membership remains alive. Some part of subscription received may belong to the previous year and some part may be for the next year. Subscription appears on the debit side of receipts and payments account and out of its subscription belonging to the current year is posted to the credit side of income and expenditure account. Subscription relating to the current year, whether received or not, are shown in the credit side of the income and expenditure account. Subscription received in advance during the current year is a liability, hence, will be shown on the liabilities side of the balance sheet. The organization will render services in future. Outstanding subscription is shown on the credit side of income and expenditure account and asset side of the balance sheet. Subscription due but not received for the current year is an asset. Subscription received but not yet earned for the current year is considered as liability. Subscription in arrears at the end are shown on the credit side of income and expenditure account and asset side of the balance sheet. Subscription for special purpose is to be capitalized, and so it will not appear as income in the income and expenditure account. Subscription for special purpose can be utilized for that specific purpose only. Hence it is treated like specific donations and shown on the liabilities side of the balance sheet. Subscription received for governor's party shown as a liability in the balance sheet because the subscription so collected is liable to be used for that specific occasion only. Subscription received by a school for organizing annual function is treated as capital received as this amount of subscription is to be utilized for specific purpose. Donations are money received by the NPO from the members and non-members occasionally. General donations are regarded revenue receipts and considered as an income for the NPO. Donations for general purpose is shown on the credit side of income and expenditure account. Donations of recurring nature will be treated as income. Special purpose donations are to be capitalized. Donations received for a special purpose is a capital received as this amount of money will be utilized in the later years for some specific purpose. Donations received for a special purpose should be credited to separate account and shown in the balance sheet. Donation for special purpose is capitalized and is shown on the liabilities side of the balance sheet. Donation for building, donation for prizes, donation for auditorium and donation for sports equipments are examples of special purpose donation of specific donation. In case the donor specifies the purpose for which the donation can be used is called specific donation. Specific donation is capitalized and is shown on the liabilities side of the balance sheet. A donor donated 50,000 rupees for a library. It means the donation received can be used only for library. That is, it is a specific donation. Honorarium is the amount paid to the person who is not a regular employee of the institution. Payment of honorarium is debited to, and shown on the expenditure side of the income and expenditure account. Payment to an artist for giving performance at the club is an example of honorarium. Amount paid to a singer for performing in an event organized by an NGO is honorarium. Payment of amount to a guest lecturer by a public school is honorarium. There are two types of grants by the government, namely, general grants and special grants. General grants are grants given by the government for maintenance, that is for meeting day-to-day expenses. General grants are treated as revenue receipts and thus are shown on the credit side of income and expenditure account. Special grants are grants given by the government for development, that is for acquiring assets. Special grants are treated as capital receipts and shown under liabilities side of balance sheet under separate head. Grant received from government for polio eradication program is a special grant. Scholarship granted to students provided by the government is a special grant. It is not debited to income and expenditure account. Any item having revenue nature is treated as income. Revenue nature means the cost used up. Ground rent or hire ground is considered as revenue received, therefore credited to income and expenditure account. Entrance fees or admission fees is normally considered as revenue received, and therefore is credited to income and expenditure account. Amount received from sale of grass by a club should be treated as revenue received and credited to income and expenditure account. Amount received from sale of obsolete items and old newspapers will be treated as revenue income and credited to income and expenditure account. Amount paid for newspapers, magazines, periodicals, etc., are revenue expenditure and debited to income and expenditure account. Life membership fees is the amount received from a member in lump sum for which he is given the membership of the organization for the whole life. Life membership fees is non-recurring item and therefore treated as capital receipts. Life membership fees is added to capital fund in the liabilities side of the balance sheet. Sale of investment is a capital receipt. Sale of investment is not an income and therefore will be deducted from the amount of investment. Sale of old sports materials already written off is credited to income and expenditure account. Purchase of building is a capital expenditure. Therefore, it will not be recorded in income and expenditure account. Purchases of stationery during the period will be added while calculating the consumption of stationery, as these purchases are for the current year. Consumable items such as sports materials, stationery items, medicines, etc., consumed during the year will appear on the debit side of income and expenditure account. Consumed goods is equal to opening stock plus purchases made during the year minus closing stock. Closing stock will appear on the assets side of the balance sheet at the end of the year. Legacy is the amount received by the NPO as per the will of a deceased person. It appears on the debit side of the receipt and payments account. Legacy donation received by NPO to be used for specific purpose is treated as capital receipt. Legacy donation received by NPO without any specific condition is treated as revenue received. Rent expenses paid in advance is an asset for the NPO. Balance sheet is a position statement showing assets and liabilities of an organization. Outstanding expenses are recorded on the liabilities side of the balance sheet. They are current liabilities. Prepaid expenses are recorded on the asset side of the balance sheet. They are current assets. Outstanding incomes will be recorded on the asset side of the balance sheet, as income is due but not yet received. Income received in advance is shown on the liabilities side of the balance sheet, as it is an income received but not yet earned. Purchase of books for library is a capital expenditure. It is an asset item and will be recorded in the balance sheet. Fund means amount received or set aside by a NPO for a specific purpose. Funds may be classified as unrestricted fund, restricted fund, fixed assets fund, endowment fund, annuity fund and loan fund. Unrestricted funds are free to use funds in any way the NPO likes. Capital fund or general fund is an unrestricted fund. Restricted fund are the funds where the usage is restricted to the activity for which these funds are created. Restricted fund can be used for the specific purpose for which it created. Fixed asset funds are created for investment in fixed assets. It's meant for accounting of assets and depreciation. Endowment fund is the fund arising from bequest or gift, the income of which is devoted for a specific purpose. Annuity funds are created from contributions received for this purpose. It's a restricted or specific fund. Through annuity fund, the NPO accepts to make periodic payment, annuities, to the designated beneficiary. Loan funds are created to grant loans to specific persons. NPOs should maintain separate set of books for each fund. NPO uses fund-based accounting, a system of accounting whereby donations, incomes, etc., relating to a particular fund is credited to it and expenses are debited. The balance sheet of a NPO such as a charitable hospital does not contain the owner's equity. The capital in case of such organization is known as capital fund. Capital fund is an unrestricted fund which may be used by the NPO for all general purposes. Capital fund is made of contributions by different parties as corpus donations for commencement and expansion of the NPO. Capital fund is also called as general fund or corpus fund or accumulated fund. It is shown on the liabilities side of the balance sheet. Capital fund is the excess of assets over liabilities of NPO. Capital fund is equal to total assets minus total liabilities. Surplus of NPO is not distributed amongst the members. It is added to the capital fund. Endowment fund is a permanent fund created by the NPO for the regular support of the organization. Amount received towards endowment fund is a capital receipt. It is shown on the liabilities side of the balance sheet. Any interest received from endowment fund investment is credited to income and expenditure account. Any expenditure relating to special fund is deducted from that special fund. Match fund is specific fund and it should be on the liabilities side of balance sheet. All the income generated for match fund should be added and expenses incurred should be deducted from match fund. If there is a match fund, then match expenses and match income are transferred to match fund in the liabilities side of balance sheet. Pavilion fund is a specific fund and expenses on construction of pavilion is a capital expenditure. Interest received on special fund investment will be added to special fund. The NPOs create special funds for certain purposes or activities such as prize funds, match fund, etc. Income related to these funds added only to these funds. Interest on tournament fund will be added to the tournament fund. This income is related to the tournament. When the tournament expenses incurred are more than the tournament fund, then the excessive amount is debited to income and expenditure account. In not-for-profit organizations, opening balance sheet is prepared to calculate opening capital fund. Opening capital fund is equal to assets at the beginning minus liabilities at the beginning. NPOs registered under Section 8 of the Indian Companies Act, 2013 are required to prepare financial statements as per Schedule 3 of the Indian Companies Act, 2013.